Alphabet topped revenue and profit expectations in its latest quarter. Strength held up in the search advertising business. Our guest says fears of Alphabet's death appear greatly exaggerated. He's channeling Mark Twain there. Let's get more from Brad Erickson, equity analyst at RBC Capital Markets. Brad, thanks very much indeed. And I know you're being slightly ironic there. Nobody was thinking Alphabet was dying, but it's certainly holding up better, search advertising, despite the inroads, if any, from AI.
Yeah, not far off in terms of people expecting their death, though, I'd say, in terms of the stock. Yeah, I think what's happening is, it's very interesting, is, you know, any of us who go to Google on a daily basis can kind of see that as this AI overview box comes up, naturally you're going to stay there more than you might click on a website or an ad, right? That's a very simple concept, and that's kind of the bear case. I think what we learned last night is they've rolled this out now to 1.5 billion monthly active users. That's over half of their base on search, right? Flexing their distribution arm. And what that does is those ads actually are converting at the same level. We've found this in our work since January, actually, so not a surprise to us. I think what was surprising is how fast they've gotten this out to the base, and it appears to be offsetting that click weakness that we can all kind of see happening as we interface with these chatbots.
So give us that again, because this is new for a lot of us. So Apple have Alphabet have their own AI product out there. And users, when they use it, are sticking with it. And so obviously the advertising is effective.
That's right. That's right. So 6, 9, 12 months ago, only some users, a smaller portion of users were seeing the box essentially to a lot of different types of queries. You don't see it to all queries, but more so than you used to. I think what's changed is now is they're up to, like I said, 1.5 billion users seeing these queries on a regular basis. And the surprising thing is these ads actually convert at the same rate, or they produce the same return on ad spend as the old legacy search ads. And like I said, we actually found this work way back in early January before they even printed Q4 results. So not a surprise, I guess, from our perspective, but just getting to that 1.5 billion users means that they're able to use that strength to offset the behavior change and the fewer clicks on the old blue links, if that makes sense.
Yeah, I think I see. And so, I mean, they've invested massively in AI, haven't they, Alphabet?
They have, and they will continue to. I mean, the ironic thing is tariffs obviously been a huge concern, general macro concerns through the first part of the year. And so the view was, or the concern was that would these guys and others, the big spenders on AI, would they slow down from a CapEx perspective? All systems go there from everything we can tell. And, that's good. That's obviously good from a macro perspective, certainly good for equity markets when you think about some of the other stocks that have performed really well and supported the market the last couple of years.
Is Bing from Microsoft as a search engine in any way a competitor?
Oh, 100%. I mean, Bing had, if we say in the old search landscape, Google had about 90% share. Bing had pretty much all the rest, so the other 10% or so. I think since Bing has input, a ChatGPT experience into their browser through Microsoft's partnership with OpenAI, they have gained a little bit of share, but we're talking very, very, very low single-digit share. So, like I said in the title, Google's death greatly exaggerated. I would say directionally they're losing market share. But again, people use these chatbots more than they used to legacy search. And so the market's effectively expanding. What that means is Google can lose some share. And again, it's fingernails of share, and they can still grow. So is that bad? We don't think so.
The stock has been something of a laggard this year, down around 15%. The NASDAQ 100 is down around 8%. And obviously, the Alphabet shares are rallying in the pre-market. Are the shares too cheap? You think broadly investors have just been too hard on this stock?
Yeah, we think so. It makes sense in terms of, again, we all use these products every day. And I think it's fairly clear that you can see something is structurally changing in terms of how we address the internet, how we search for and find things on the internet. So I think it makes sense of why the stock's performed the way it has, given the results earlier in the year. But yeah, the stock's trading at 16.5 times where it's indicating this morning. That's below a market multiple. It's growing earnings well into the double digits, returning tons of capital, treating their investors right, raising the dividend. That's a name you can own as a cash flow compounder for a long, long time. And particularly so if they continue to demonstrate that, in fact, AI is not a weakness for them, but a strength, that's definitely a name you want to increasingly own.
We better jump. Brad, thank you very much indeed. Brad Erickson,
thanks for having me.
Joining us there, equity analyst at RBC Capital Markets. Coming up,